the mood of the market has certainly changed, Brian. In the last couple of weeks, we had a really good week last week, and again, that continued throughout this week as well.
It did, and a lot of it seems to be really driven by interest rates, as far as the idea that the Federal Reserve might be on hold, something we've been calling the Powell pause on our investment committee here. And with this interest rate stability has come some decent rallies in the broader equity markets. And so I think a lot of it has to deal with just, hey, rates aren't going to the moon anymore.
And we'll have to see, but the S&P 500, folks, is up 14% for the year, and that may come as a surprise to a lot of people. But last week, the S&P was, and the NASDAQ was up 6.5%, and again, that continued throughout this week. And in earnings reports as well, we're about 85% through the earnings reports, and most of them are better than expected.
They are, and the beats have really come more on terms of the bottom line, so in terms of earnings. So when we think about kind of the financial statements, you have top line, which is the revenues and the sales, and then bottom line, which is the earnings. They've been beating on the bottom line, which is healthy. However, there has been a little bit of weakness on that top line revenue growth. Now, kind of putting on my economist and strategist hat, I know that economic growth usually goes up and down with the top line sales growth. And so when you get from the top to the bottom, you get some cost cutting that can take place. And it does seem as though a lot of, especially the bigger companies, have already tried to right-size their workforce, maybe their debt structure, in order to deal with any sort of weakness we might see in the future in terms of the top-line growth.
And so let's talk about that in more detail, because we pay attention to a lot of these macro ideas, and that really comes from the Federal Reserve. And, of course, you talked about the Powell pause, but he certainly sent his minions out all across the country, including the Minneapolis Fed chair and the San Francisco Fed chair. Both were singing from the same song sheet.
Yeah, it really does seem like that. So, you kind of go to church and you've got the hymnal and everybody singing in unison, and it really did seem like that. There is a little bit of the dissonance, so some people like me who can't really carry a tune necessarily. So there are a few of those out there. But they do seem to say that, hey, interest rates, these long-term interest rates have gone up, and that has helped to tighten financial conditions, which is what is doing some of the Fed's work for them. So as a result, instead of having to hike rates any further, the market is starting to do the work for the Fed.
And you look at that, and of course the San Francisco Fed president said it is too soon to declare victory, and that's almost exactly what Kashikar said as well. But there was an interesting comment that she made in San Francisco, which is they're standing in the ready position to react either way.
Mm-hmm. Yeah, and that is really interesting. Every meeting is what they would call a live meeting, so it could go up or down. And that's actually an improvement, because since March of 2022, it's almost like they have been singularly focused on hiking, and now they think that maybe they could pause.
Yeah, and we'll have to see. And we look at not only here in the United States, but globally as well. You showed me something that was really interesting that was happening in Germany.
Yeah, so Germany, for 4 months in a row, they have had negative growth with industrial production. Now, keep in mind, Germany is somewhat unique in terms of their age structure, also their manufacturing base. They tend to manufacture a lot more than what we do in the United States as a percentage of their overall economy. They also have tighter ties to countries like Russia and to China. And so some of the weakness in China and the higher energy costs because of the continuing war against Ukraine by Russia is really weighing on that German economy.
And finally, we want to look not only backwards but forward. Next week, we have 2 economic reports that we should pay attention to.
Yes, I think that 2 key things. Number 1, consumer price index. What is going on with inflation? And number 2, retail sales. Retail sales, we know that this summer, people were having a lot of fun going travel, hospitality, leisure, concerts, all those things. And are they beginning to tighten their belts?
And what's the term that you used?
So, yes, we've been calling it funflation. If you look at the different parts of inflation that have been going up the fastest, it's really been leisure and hospitality.